The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start off the day, as usual, with the German DAX going up, the FTSE going down. Not unusual, two different countries. We need to cover, oh, by the way, I posted the picture from Norm Winsky. It's of the lunar eclipse that we had yesterday, and I hope you take a look at it. We're over some major stuff here, you know, with all the Astro stuff. And we will have Shane Smulyan on as our guest today, and he'll be talking to us a little bit about some of these things that we see going on. So we'll be able to look at it. I must have posted the wrong one. Let me get the DAX up. Hold on just a second. Here's the German DAX. I'm pretty sure this is it. Let's get seeing. Well, I know that one's the DAX because I was watching that last night with Mr. Hugard from Trader Tom. Folks, we got a couple of things that we need to cover. We posted a few charts yesterday during the show, and I wanted to, time out just a minute, please. Okay, just one second here. There we go. Okay, now this is the wheat trade that we're looking at. You notice we had the ABCD, the 3 drive to a top there. We had the market break, the rally back to the 382, then the move back down. We're looking for a potential 382 rally up here at around 605 again in the wheat, if in fact that occurs. Now, folks, remember, sometimes these things work right away, and sometimes they don't, because we don't know which ones are going to work and which ones don't. That's for sure. That we'll never know that. But let's take a look at another one we were watching last night, and that was the copper. Let's get this up here because that's very interesting. What's happened in copper here is the fact that you'll notice the 382 hit at the 356. We came all the way down to 350. We didn't quite take out the lows of the 11th. Then we started to rally, folks. You know, you're only risking 2 points on this, and when you make 5, you got to take something in the book. So the best way to do that is to lower your buy stop down from 358 down to 357. But look what it did this morning. Went right up to the 382 again and immediately broke $3 per pound. That's a 3 cents per pound, not $3. But that's a pretty good idea that if it gets above that 356 again, you don't want any part of the short side. So let's keep in mind of that. Now, ordinarily, I'm not an Elliott wave person, and the reason why is, Mr. Prechter's got an IQ of about 160 or something like that. At least I think that's what it's reported to be. I know he belongs to Mensis and some places like that. But, I just look at really simple wave structure, folks. I don't worry about these little sub accounts and stuff that you have, but I respect his work a great deal. And just do things a little differently. He does. Many times we see the same thing. Maybe it look a little bit differently, but I don't count those 5 waves because I get too confusing. I got confusing when I was being taught this by John Hill in 1970. That was several years before Mr. Prechter got started with Frost. And I still have stuck with it, and it's served me well. So I ain't going to change now. No way, buddy. Can't get me off the horse. All right, let's take a quick look at something here, folks. This is a very interesting chart here that someone asked me a question about, and I want to bring it up. This is right out of the Elliott Wave book, this newsletter this week. Thanks to Mr. MR for sending it on. I want you to notice the bottom down here. That was December 1974. That's when the Dow had hit 1,000 during 1972. You see that time period. It went sideways for well over 8 years. It made its bottom. The real bottom came in on December, I think it was around December the 14th or 15th of 1974 when we had those monster conjunctions. I covered that in the book. the astro cycles, the trader's viewpoint, and then we took off. But look what they're saying now. They're saying the roaring 20s up here. Now, he just put the picture in because it's from Money Week, I guess. But the real reason is someone asked me a question, have I ever seen anything with the market going up with bad news? Folks, that's all it ever did during the roaring 20s. That bottom that we made down there when the Dow Jones was 32, I believe, on July the 8th of 1932. It topped in 1929, went all the way down to 1932. Bear with me a second. I love this little book. It's called Only Yesterday, but it depicts everything that happened during the Roaring 20s. Here's what was going on from 1927 through 1932. For the first time, we had air conditioning coming in. That was the reason that they built the Empire State Building, because they had, they were able to get air conditioning up to those floors. Toilets and water, folks. When I remember the Depression, because I lived with my grandmother during World War II, and she had a cistern, a pump, and we had an outdoor toilet. Ice boxes, refrigerators were just coming in. Cars, there were 2,000 automobile companies in 1929. The telephone was just getting started. The radio was getting started. The roads were getting started. For heaven's sakes, we didn't have the road system until 1955 due to President Eisenhower. I don't know if you know this, but these interstates are built with a 1 mile stretch so they could land planes in case we were at war with somebody. So those were I'm just thinking of a few of them, not counting all the chemical stuff and all the medical stuff that we have. Holy cow, this was really big. So this is nothing new. Now, this chart that you're seeing like this, someday is going to make a top. I don't know when it's going to be, but someday it will make a top. Okay, Mr. Chapman knows all this stuff. Basil saying Otis elevator allowed for skyscrapers. Here's a question. I'm waiting for him to finish, because if you ever listen to Basil, he's got some great history stuff along with these things. So that's pretty good. What was good? Yeah, I have relatives that still have outdoor things too. So that's it. Anyway, those are just a few of the things that I'm saying. So it'll eventually happen, but who knows? I don't know when. I'm just giving you my 2 cents worth. So let's keep an eye on some of these things. We did. Someone asked me to review that copper chart that I sent yesterday, showing the relationship of the stock market to copper. I'll bring this up and let you see it here. We made that 1.618 expansion on the yearly chart up there at 360. That was also a major Gartley pattern on the monthly chart at 362. So there's a major resistance up there, I would think. But if we get about 362, then there's no resistance. I mean, it could go to $4 or $5 a pound in the copper. But the risk here now is at 357. You don't have to risk very much at all. That's a 10-4 of what we're watching here to take a look at. So I think it's important to remember these numbers are all related to probability. They're never related with certainty. Here's a nice one that Rich Anderson sent to us, just showing you how much the option markets play in these games here. You'll notice this is the average daily option volume. Look where we were, 74.75. That's when the CBOE came in, Chicago Board Options Exchange, when Norm was first a member down there back in 1975, 76. And you'll notice here that this volume is a tad bit higher, like 25 times more. We'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we got a chart from one of our friends over in Hong Kong. Charles, I hope you're listening. Want to wish you and your lovely family a happy holidays. And I imagine your little boy is getting about ready to start grade school here pretty quick. Anyway, this is a IPO that just came out. And believe it or not, the IPO number, they give numbers over there. And it's 618 as the Hong Kong Stock Exchange. But here's what happened. He wanted to buy it, but he waited for the pullback. If you'll notice on Wednesday, December the 8th, we had December the 9th, he had a beautiful ABCD pattern right there at the 61% retracement. He entered at 108, and now the price is above the 1.618 expansion, which is at 136. The stock is trading at 137.50. So he's asked, if it goes beyond 1.618, where will it go? I don't know, but nobody else does either. But the way I would handle it, and I already sent him the information on this. If you notice, the low that we made here yesterday was there at the 130 level, roughly 130 and a half. And so I said, do two things right here. Put your stop at 130. So if it gets down there, you're going to be locking in a very nice profit of, well over, $26, $22, $24. Let's try to do the math right, Larry. And the second thing is, every time it goes up another $5, raise your stop, by $5. Just follow it up, just let it go and see if it's running. And the third thing to do is, when you're done with the trade, transfer all the proceeds over to me so that I can have a wonderful Christmas. Anyway, that's how I would handle it. I don't know any other way to do it. There's no other patterns in here that are forming, and this thing is an IPO, so you don't know what's going on with it. I have no idea what Hong Kong 6618 happens to be, but that's neither here nor there. Well, that's the way I would handle it. It doesn't make any difference what it is, whether it's cattle, hogs, soybean oil, doesn't make any difference. I would handle them all, pretty much the same way to see if that's any help at all. Someone's asked the question, am I looking for a top in the stock market? Folks, I don't care about a top in the stock market. It really is not. By the way, we have to congratulate TFNN folks. They got 1 million views this year on YouTube, and I think that's a real tribute to the folks here at TFNN. God bless them, and hopefully they'll be able to continue on all this good information that we have for you folks. We've got some really smart contributors here in the den and some really smart people in the den also. If you remember, Mr. Z rode that copper from 210 to he might still be in it. I don't know. We'll have to wait and see. Here's another interesting factoid that we got from Rich Anderson, the man who reads everything in sight, along with David White. Let's take a look here. This is hold on one second. We'll get it up here so everybody can see it. This is the short interest. It's from Goldman Sachs. This means it's the lowest short interest that we've had in a long time. Look at the highest short interest that we had, folks, at the high of the market in 2008, which was the what do they call it? I don't even, the housing bubble thing, whatever it was, okay? That was as high. Look where we are now. You can't get anybody to short stocks in here. That's really what that means. And so that probably means it's going to keep dropping and dropping and dropping, and there'll never be any shorts again. And they'll probably make it illegal someday to short stock. They tried that once before, but it never really did very much. But we'll move on to the next one. The U.S. dollar is the next question. We are still hovering. I don't have the chart this morning for it, but we're still hovering near the lows down here at below the 90, right around the 91 level. You're going to have to get the euro really strongly above 122 in order to get this market, I believe, to get it to move to the upside. And the reason for that is, you're going to have, this is the long-term weekly chart here on the euro. I posted this again Monday, but it's worth looking at it. Okay, Ruby's asking about natural gas. Yes, I will do that, Ruby. Just give me one of our section here. You'll see that 122 is really important here in the euro. We've been up at the same level for quite some time, and we'll see if that's going to be the case. One other thing, just give me a second here to do the natural gas for Ruby, and then we will be moving on. Let's see where we are here. So it's already had a pretty good move here. Hold on just a second. Yeah, where are you? There we go. Give me 1 second here to get this up here. Natural gas. Okay, yeah, just having a little bit of a move. This is nothing. Hold on just a sec. This is let me draw the ratios in so you can see them, because this is the 135 pattern. We're almost spot on there. Let's see. Let me draw the line in so you'll be able to see it real easy. And just draw that trend line down. There we go. Now, this is the natural gas. You'll be able to see the top part of the chart, which is important. We've had a 5-day rally from the bottom, Ruby. That was yesterday. So we're right at the 50% level of the high that we made, back on the 23rd of November. So what you want to be watching for is a nice little move to the downside. What I would be watching, Ruby, is go to a 60-minute chart, which I have up here right now, and this will only take a second, and that's why you don't have to count any waves or anything. You just got to look at one tiny little thing, and that'll tell you where you want to be. You want to watch for the very first 38% retracement that would have come in today at 258, and the low today has been 259.6. But we've already rallied 5 handles, so that's probably telling you that ABCD that we just completed right there, well, that's a good one, Ruby. I hope you saw that. Oh boy, that's a really nice one. That should really hold that level. Yeah, let me get that up here in a second. Now this is where I differ than Elliott Wave. You see, I'm just looking for price swings to come to Fibonacci ratios. That's all I'm looking at. I'm not worried about sub-wave 6 and sub-wave and all these little ones in between. That just confuses the heck out of me. And it also confused John Hill when he started teaching me this in 1970. So that's why I'm watching. If you blow this up, you can see it a lot easier. You know, everything that we do here, folks, is AB equals CD. Now, not those patterns are not always the same. Of course, they're not always the same. But when they do work out the same, then that makes it pretty nice. And that's what the whole thing is about. Now, one other thing that I would be watching today is just from kicks and giggles. Let's get this up here to change it for 1 second. It'll only be a minute, or only a second, actually. 5, 4, 3, 2, 1. Here we come. Now we're ready to go. You'll notice here that we are expecting, let's get this up here, and we are expecting a nice little rally here in the natural gas. So watch it at around 11 o'clock. Watch it in 2 hours, because if you got a little pullback there, that would be a spot where you'd be able to hang your risk reward banner on it and see if it's going to work. That's the whole key to what we're watching now. Okay, now we're still 30 handles below the 78% level in the S&P. Now, last night in the market, I sent out a video, and I'll just bring this up to you because with that big sell-off that we had yesterday, there was nothing bearish about that NASDAQ. Look what it did, folks. All it did was make the 78% retracement of the low on the 13th of December, and it made the 38% retracement of the low on December 11th. You know, and that's not bearish. I mean, my goodness, you know, I thought we were going to maybe get to 25.40 today. We got to 25.64. 877-927-6648. Stay tuned for the Wolf Trader.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolian, thewolftrader.com, as our guest today. Are you there, my friend?
Good morning, Larry. Is this Duke and Duke?
This is it, 100 South Broad Street. Shane, we have a question from two of our listeners, same question, so you can answer it the same way. Why is it so important, what Bill Meridian and also Tim Boss talked about between December the 14th and December the 21st? Can you elaborate?
Okay, I did minimal astrology today, but I will talk about this. We are reaching a massive astrological peak this month, and I really want to talk about what Norm Winsky said last week. I think Norm Winsky, he's a very good astrologer, and he was talking about that we're hitting all of these peak cycles, and they're all basically coinciding right now. The Jupiter-Saturn aspect, it's conjuncting in 0 degrees of Aquarius, and the important thing about that is that it's occurring on the solstice, which is the Aries point. Now, in Uranian astrology, we talk about the dial, which is the fourth harmonic. So we also consider that the Aries point, even though technically it's in the spring. The point is, the Aries point affects the world. The Jupiter-Saturn conjunction is at 0, which is also connecting at 0 degrees. So this is talking about a major change in the world, okay? And we're also hitting these peak cycles that have not occurred for thousands of years. The Jupiter-Saturn-Pluto conjunction we're looking at 4,000 years. The Jupiter-Saturn conjunction is, I think it's about 800. So you're talking about peak events. Now, on top of that, I also do Chinese astrology, which we're in the year of the rat right now. This is the month of the rat. So you've also got another peak wave coming in. So I think we're at some type of a major peak right now astrologically, and it could be a peak in the market. And I'm going to get into that. So like I said, I did minimal on the astrology, but this is really, it's hard for me to ever even remember when we had this much astrological activity in terms of new cycles, new beginnings, particularly for the world. So hopefully that answers the question.
Yep.
Also, first of all, I'd like to say congratulations to TFNN on the 1 million views. Quite an accomplishment, and I'm great. We're all very grateful for them and everything that they've done for the trading community. So, good job on that. Let's go to the Fear and Greed Index first here. So, Fear and Greed Index is an index that measures the sentiment from multiple levels, and it's at it's high. It's at about 69. It's not as high as it was, but it's still up there. So this is obviously a bearish sentiment on the market. When this thing gets too high, it tends to reverse. Now, this did get up to near pre-COVID levels here. So you can see this is the actual graph of the fear and greed. So it did get up here, and it got up to, I think, about 88. So if you look over here on this graph, you can see this was before COVID over here. So we basically hit those levels. And I'm going to show you another chart relating to Bollinger Band width, which deals with volatility. We're also at the February 20th levels. Okay, so it appears that a big move is about to happen, and normally I would be more bullish, but because of what I'm seeing with the Fed juice, I'm a little worried right now that this market could be hitting some type of a top here. Okay, so those things are setting a backstage, but the fear and greed is really just kind of it's just a general indicator. It's nothing that powerful, but it's something to look at. Now, this is the little bit of astrology I'm going to talk about today. This was the solar eclipse that happened yesterday. This was really, really powerful. This happened at 23 degrees of Sagittarius. Now, this also occurred across from the node and squaring Neptune, and it's making connections with Pluto and Zeus. Okay, what that means is that that's dealing with deceptive connections, things below the surface, secrets coming out, and then Zeus is military. The interesting thing about this is that this occurs near the galactic center. So the galactic center is a very important part of astrology because it's dealing with global universal events, much like the Aries point, much like the node. These are points that affect everybody. So the galactic center was it was on the other side of the sun, and Mercury was on the right side. The midpoint passes over the sun. So what does that matter? Well, we had a cyber attack yesterday. So Mercury is information, and galactic center is kind of like the center of all information. And then we have the Neptune and the node there. So cyber attacks are more of like a Neptune type of an activity where things are going on behind the scenes. You don't really see them. And then when Pluto and Neptune get together, these are secret events. These are events that are happening behind the scenes. And so I would say we really need to look for possible military actions here because this chart is suggesting that. Also, change in belief systems, because this was in Sagittarius, that's dealing with our beliefs and how we view the world. Also, this eclipse, I believe it's kicking off these events that we were talking about later in the month, that this is, eclipses tend to bring things to the surface. This eclipse is going to bring a lot of secrets to the surface. So I just found that to be incredible that all of these events were lining up right when we had that cyber attack yesterday. So this was the headline yesterday. They're saying Russia was suspected in the major cyber attack, but a lot of people think that it might be from the Iran scientist that was assassinated. So I just found that fascinating that it lines up right with the eclipse, and the eclipse is describing that with the galactic center and Mercury, which to me that's the information, that's the hub, and the treasury is kind of like the hub. A lot of times when we deal with the galactic center, it deals a lot with Wall Street because that's where the kind of the center of the universe is in terms of information that goes through the world. Everything kind of goes through Wall Street. I know Chicago would argue otherwise, but really it's Wall Street. Okay. The other thing here too is that it's very possible that we may be coming into another lockdown. I know Joe Biden spoke of this before, but there's a good chance that this will happen, and I think it's going to be a lot tougher the second time around if we do go into a lockdown. So I think that could be tough on equities. So we're just gonna have to watch this and see what happens. But for now, I'm getting more concerned than I had been in the past. So, any questions so far?
Well, I don't know about you folks, but I sure think this is really interesting stuff. Keep going, young man. You got spot on. You've got my attention. So please continue.
Okay. So again, I can get more into the astro later, but everybody is correct. You have some excellent astrologers on the show. And as far as like binary events, if I had to pick two people, I would say I'd have to go with Alfie in terms of like being able to pick an event, but I would put Norm Winsky right there at a close second in terms of being able to pick these events closely. So I just thought his analysis last week was very good. Okay, so let's talk about the S&P 500. So October to December, the Fed juice had a radical spike that we have not seen since COVID. Okay, so this was unusual because it had been declining since May, and then in October they had this huge spike, and this has coincided with this rally that we had. But we started to see the S&P start to resist the Fed juice, and this is something that I have rarely seen. Larry, I've been watching this since 2010. This is one of the few times I've seen this. So the S&P has been, in other words, they're pushing more and more and more money into this, and it's barely moving. So that's a concern for me. That's my biggest concern, that I just watch what the Fed does. But if that's going to go with a lockdown coming, so if the market's going to start resisting the Fed and there's a lockdown coming, I consider that to be a problem, okay? Because to me, it's all about how is the market responding to what the Fed is doing.
Okay, stay with us. We have to pay a few bills. Shane Smolian, wolftrader.com. We'll be right back. 8 seconds.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smulligan, thewolftrader.com. Shane, would you continue, please?
Thanks, Larry. All right, so the lockdown coming, I think that would be very difficult this time, especially if the market's not going to be responding to what the Fed is doing. The Bollinger Band width, guys, this is really important. The Bollinger Band width is probably one of the most important ways to interpret Bollinger Bands. I know they're used in other ways, but it's at the same level that it was on February the 20th, 2020, and that was the peak, right near the peak. So I really got to wonder, is there a big storm coming here? The short term right now is peaking. Okay, we have the Monday and Tuesday are positive using this alpha omega cycle, which I'll talk about in a little bit. But the medium and long term indicators are now pointing down. So I believe the second part of December may show some significant selling pressure coming in here. I mean, I think today was the last positive day on this short-term cycle on the market. So this is what I was talking about with the Fed use. So I put these two rectangular boxes here. On the left, you can see the pink one over here. I was just highlighting it here. This is the Fed's response during COVID. And this was the recent over here where it says letter A and B. This was the recent response since October, right? So this coincides with this rally in the market. So you can see that the Fed really was pushing a lot of liquidity into this market, and the S&P responded in turn. I mean, even these little wiggles showed up in the market. But what we're seeing here is what's concerning to me is that they're pushing up this high and the market starts to fall off like this. Now, when you see something like that, what that's telling me is that if the Fed starts to pull back even a little bit here, that you could really start to see some selling in the S&P. And so for me, from what I watch, this is really important because given the amount that the Fed has been pushing into this market, the market should have been much higher, and it's not. So I don't know why that is, but I just know that I link and correlate these two values all the time with the Fed Use 3.0. And it's not going up as much as it should. And that's, everything's on a relative basis. So if you're pushing this much into it, the market should have been higher. The next graph here is the Bollinger Band width. Now, this is what I was talking about. So the letter A here, this is right near this top before COVID, and the market, when this Bollinger Band gets low, the volatility is about to expand. Now, it can expand by either rallying, going down, or it can just kind of go zigzagging up and down, in extreme ways. In February, of course, it was the big sell-off here that we saw with COVID. So we are at those levels now. This is a very reliable indicator in terms of picking a rally. So the question, picking the increase in volatility. So it could be it could be a rally, it could be a decline, or it could just be some type of a big increase in volatility like this. So we have to watch this because I think the odds are leaning towards a sell-off now because the market is starting to resist the Fed here. So I'm a little concerned about this. I mean, we had some, back in August and September, right before it happened, we did have some big moves in the market right after, but the second time it also resulted in just an increase in the volatility like this. So this is something that I think people need to pay attention to because this is almost a better indicator in terms of imminent turns than even like the VIX or something like that. So it doesn't tell you the direction of the turn, but it tells you that a big move is likely coming. Okay, so the next thing I want to show here is this is my new Alpha Omega 2-day cycles. So what I've done is I've designed a standalone trading system to look at very small moves in the market. So this will show you about 2 days of moves in the markets. It's optimized using look forward technology that I've developed. This is a standalone. So this goes with the short-term trades. And so if you look over here on the right, you'll see that the S&P is now it's got these two positive days into here. So we're on Monday and Tuesday right now. And then it's going to start, the next 2 days, Wednesday and Thursday, will hit a red spot there. So, these Alpha Omega signals are now available for every single newsletter, by the way. So I post them every day. But this adds another very important layer to our short-term arsenal because the short term is the most difficult to predict because of the noise that you get in the market. So that's the Alpha Omega cycle. I just wanted to kind of share that with everybody. That's a new feature we have. It's available in all newsletters. For whatever newsletter you subscribe to, it's available. And this is kind of a summary of the closing bell, which we talk about every day. And over here, I have the short-term indicators here, and then I have the longer-term stuff over here. So the next day, this was for today. We still have that Alpha Omega up, and today is statistically the biggest day up for the S&P, right? So statistically, it's not surprising that the market's up today. This is a short-term cycle. But longer term, guys, I'm getting more concerned now because you have a sinking Fed juice. You have the planetary speed index just made a high. So I'm more concerned now that the medium and longer term is turning negative. And we haven't seen this in a while. We had a period for a long time where it was just kind of going sideways. It wasn't really doing too much in the market. So that's just something to look at, and just we got to look at the short term and the medium and the longer term. So that's what's going on there. One thing that I like to look at is how the S&P does in relation to technology. So, for example, I have the S&P here, right? So I look at how does the S&P do versus Apple, how does the S&P do versus Google. In order to have a decline in the markets, you need to have the technology leading the way down. Usually that's been the case, since the 2009 lows. Technology typically leads on the way down and then leads on the way up. So what you're seeing on a relative basis down here is you're starting to see technology start to lead on the way down, and that's typically a bearish situation. So we don't have a full out bearish situation yet, but this is telling us that we need to be careful about this because technology should be leading, and it's not. It's actually it should be leading up. It's leading down in this case. So that's just something to pay attention to. Now, the next chart here is the actual S&P. I know this looks like a little bit of a Christmas tree here, but this is how I track all of these. I put all of these indicators on top, and they're in different colors. So the Fed juice goes into a sell on the 10th. The planetary speed index went into a sell on the 11th. The general combined transits, which is much like a Bradley, but it's got more aspects to it, that goes into a sell last night and today. So, and then the Cat Master signal, which is a composite astro indicator, also goes into a sell. So we are starting to see some major energies line up now to the downside on this S&P. And that combined with the other aspects that I showed you, the Bollinger Band and the Fed juice and all of this stuff is telling me that this could be some type of an important top on the markets. And if the market's not going to respond to the Fed, then you could get some selling. I mean, this is the first time that, like I said, that I've seen this in a very, very long while on the S&P. It's not all bad news. I mean, we do have I do track the corporate credit markets. How is the market flowing? And there's another issue too, by the way. The Treasury and the Fed are arguing right now, and they shelved the emergency lending powers, which in my opinion is a mistake. I think they shouldn't have done that. So what I like to watch a lot of times is this is the long-term yield here versus the high yield, which is the bond market. And so when the corporate credit facility started, the Fed came in and started providing liquidity to these high yield bonds. And so I have an indicator down here that tracks how these high yield bonds are doing versus the long-term yield. And as long as this indicator is falling, that's good for the S&P. So right now, that's still okay. In other words, the flows are still moving into the corporate market, but that's something we got to watch.
Okay, we'll be right back with Shane Smolian, wolftrader.com, after we take a short break.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're still speaking with Shane Smolian, wolftrader.com. You want to continue, my friend?
Sure. I just I have a lot of information here, but gold. I just wanted to tell everybody we're approaching an annual low in gold, and I think there's a short-term low possible Wednesday or Thursday on gold. So if you take a look here, you can see that the Fed juice and the Astro. This was from last night. Obviously, it went up today, but they're tracking lower, and so this has been tracking lower, and then the dollar juice has also been tracking lower on gold. But I think we're coming into some type of a low here soon. This is the solar cycles coming in right around December 21st, right around where that conjunction's happening with the Saturn-Jupiter conjunction. So that's gold. So real quick on that. And then Bitcoin, I know people watch Bitcoin. Bitcoin's kind of stalling out here. It just did hit its annual peak, guys. It peaked out around 1127. So that's an important high. So it will be interesting to see how Bitcoin does here in the coming months, because Bitcoin has a very pronounced annual peak, and it hit it on November 27th. So it could be that it just kind of consolidates and then it heads higher from here. It's possible, but I just wanted to point that out to everybody that it did hit its annual peak. So if anybody wants to get in contact with me, you can go to wolftraderfutures.com. That's the website, www.wolftraderfutures.com. And I'm Shane Smolien, and this is my contact information. If anybody wants to get in contact with me, it's shane@wolftraderfutures.com, www.wolftraderfutures.com. We have many newsletters on different markets. We have S&P, metals, energy, currencies, cryptocurrencies. We have an astrology letter. The gold package includes everything, and then we have the new Fast Fed. I didn't even talk about that today. That's a new trading service. That's a full trading service in terms of limits and stops. And it's doing very well. We're off to a good start with that. But again, we're just starting that. That started a couple of months ago. But so depending on whatever your interests are, there's definitely something there for everybody. So any questions? Anybody have any questions?
All we're seeing is accolades. They're giving you some really nice kudos here in the den today, which you certainly deserve, and we'd like to have you back again sometime before the end of the year. Hey, we'll talk to you in a week or so, Shane, and may God bless. We'll be right back, folks, tomorrow